The rate cuts everyone was waiting for in 2026, they're not coming. And if you own a home and want to buy one or invest in the Bay Area real estate, that changes your next move entirely. I'm Ann, 25 years in the Bay Area real estate. Let me tell you exactly what this week means for you. Two things happened this week that matter enormously to our market. First, the Federal Reserve held rates steady, and the Fed Chair Powell made it clear just one rate cut projected for all 2026. The spring relief everyone was counting on is off the table. Second, the European Central Bank also held rates and completely reversed its tone. 2 months ago, Europe was signaling cut. This week, they flipped hawkish, adding surging oil prices from the Middle East conflict, pushing California gas towards $6 a gallon. And if you have three forces all pointing at the same direction, costs stay high, rates stay high, mortgage rates are staying above 7% well into the fall. For seller, if you're thinking about selling, your window is in the next 60 days. Santa Clara County has under 800 active listings. San Francisco has barely 1 month supply. Buyers are still competing over scarce inventory right now. But once the market fully absorbs that rate relief is not coming this spring, offer counts drop, days on the market rise, and your leverage shrinks. The seller who move in the next 60 days capture the last window of optimism in this cycle. Do not wait for summer. For buyers, stop waiting for the perfect rate. Start negotiating on price. Homes sitting on the market for 20 plus day to day have nervous sellers, and nervous sellers are flexible sellers. That is your leverage right now. And remember this, you marry the home and date the rate. When rates eventually drop, you refinance. You cannot refinance your way into the right school district or the right neighborhood after you settle for the wrong one. Move with information now before every other buyer floods back in the same time and your leverage disappears overnight. For investor, near term, South Bay multifamily is your play. Every buyer priced out of homeownership becomes your tenant. Rental demand is tightening right now in San Jose, Santa Clara, and Sunnyvale. Minimum term was 2027. Over $1 trillion in commercial real estate debt matures that year at rates that no longer pencil. San Francisco office is already at 35% vacancy. Distressed Bay Area commercial assets at 40 to 50 cents on the dollar is not speculation. It is math. Be positioned when that window opens. Every market cycle has a strategy. This one does too. I help Bay Area sellers, buyers, and investors find theirs. If you want a real conversation about your specific situation, link below. And if this gives you value today, subscribe. I break down this market every month with this same depth and honesty. I'm Ann. Let's talk.